Welcome back, everyone. This is Mo Investing, and we keep things short and sweet, so let's jump straight in. Now, Micron is a business that's up 650% in the last year, and that's due to AI and the demand on memory. So what is Micron's business? It's the only major American memory chip maker and one of just 3 companies alongside Samsung and SK Hynix that dominate the global market for the 2 most important types of memory, and that's DRAM and NAND flash, which are used in a lot of different products, such as high bandwidth memory that's stacked onto NVIDIA's AI GPUs, servers, and smartphones. Now, if we look at some of Micron's numbers, their market cap is at 958 billion, trailing 12-month PE at 18.95, next 12-month PE at 5.92, 2027 PE at 5.53. Their operating margins at 65%, and then they have basically a non-existent dividend yield at 0.06. They're sitting at 24.4 billion in cash and 5.7 billion in debt, and their current stock price as of the recording of this video, the 19th of July, is $848. Now, looking at some of these strengths, Micron does operate within an oligopoly with SK Hynix and Samsung, so there is more of a moat around the memory chip business rather than Micron itself, where it's hard for entrants to penetrate the space because these 3 dominate it. There's also SEAs, or strategic customer agreements. These are agreements where there's binding commitments to purchase specific volumes over a number of years, and this has created visibility that hasn't been seen before in the memory space. So these agreements should strengthen the business model and create more visibility on their upcoming earnings. Moving on to the weaknesses, they are a structurally cyclical business, which can be seen through this operating margin chart right here. The latest uptrend seems to be the most extreme it's ever been, so it's likely that the downtrend will be very extreme as well. They're also a very capital intense business. They're expecting to spend 27 billion in capex this year, and for that to increase next year as well. And finally, Samsung and SK Hynix are both aggressively expanding capacity, which means sooner or later supply will meet demand, and that will spell the end of the uptrend in the cycle. If we look at Q3 2026 earnings, now these are the most probably insane earnings I've ever seen. Their revenue was 41.5 billion, increasing an insane 346% year over year. Their gross margin was 84.9%. Their operating income was 33.68 billion. And then if we look at the financial summary, just to highlight how crazy their earnings have been, revenue came in, as we said, at 41.4 billion, but if we look at the same quarter last year, it was 9.3 billion. Gross margin was 85% of revenue, while the same quarter last year it was only 39% of revenue. Operating income was 81% of revenue in this quarter, and then the same quarter last year was only 27% of revenue. If we look at EPS as well, it was $25 for this quarter compared to $1.9 for the same quarter last year. So that really does show how insane the earnings have been for them. The increase has been quite crazy. Looking at Q4 2026, they're expecting another blowout quarter. So revenue is expected to be around 50 billion, gross margin around 86%, and EPS around $31, and then they expect to spend around 10 billion in capex. So moving on to valuation, now I'll be honest here, I did some DCF calculations for Micron, but the variables were too unpredictable for me to give you a base case here. But what I can show you is analyst estimates. So analysts do expect earnings per share to ramp up going into 2027 and 2028, and then ramp down, which is in line with the expectations of memory chip demand. Now, the average analyst price target for Micron is $1,462, which would represent an increase of 71% over the current price. Now, do I think this is feasible? Yes, but I think you'd have to be very confident with your estimations, and in my opinion, it's not worth the risk with how swift the downtrend could be. In terms of rating, I'll give Micron a rating of 2 because of the cyclical nature of the business and the general unpredictability of earnings and the risk associated with the business as well. And in terms of verdict, I think Micron is an avoid. I don't think this is a stock that should be chased right now with the associated risk. So that's it for the video. Thank you for watching, and I'll catch you for the next one.